First of all, it's higher time frame you're looking at to confirm range compression. In November, the election month last year, large green candle. Disregard candle wicks, rule number one. Look at the bodies. December, the next month after the election, a descending candle body, but much shorter. And then here we are, 2025, January, even smaller candle body, huge wicks on either side, a discount wick and a premium wick, but that's not what we're concerned about. It's about where was the bulk of the trades on this candle body. And it was much smaller than December or November. And here we are, second week into February, into the Asia session of CPI day. And this is February 12th. And so what you want to look at here is this body. We've got a discount candle wick, and we look like we're trending up, but it's compression. Let's go to a smaller time frame. What we've got here is a weekly chart of the micro E-mini S&P 500, and we've got Keltner channels, middle black, upper red, and green on the lower. And what I've got here is I spread this thing out a little bit, so let me open it up. But I want to just note here how February is 2 weeks of green, okay? And how we ended January was a very long discount wick here. We've touched the last 2 weeks prior to this week, this middle Keltner, again, 59.79 on the weekly. And here's where we're at right now. We're up here. And here's where we could be going is 61.40s this week, because these are relative equal highs. We're tagging some upper candle wicks. So I just think that this is a point of interest here for me. And I need to have dry powder if I want to take advantage of fading this move up here. And if it's not going to do that, and we're going to go lower, I need to see some displacement on smaller time frames. It's not going to necessarily be the weekly, but we do have a current candle here. And so that's the direction I'm going to have. Not that I am bullish or going to take longs. I do think there is seasonality for this thing to go another week up. But I do think by the end of the month, into March, we could see a complete reversal below this middle. So this is just my opinion, but note the length of the candles. We don't really have, in essence here, a consolidation unless we really stretch out 61.70 down to the lows here of 5,800. We're looking at over 300 points of range. So that's a lot of ability to make money in this market. 225, 2025 is right here. So we've had 6 weeks, including this week that we're in. And this has been an okay range so far, but it's been all up and very little candle wicks. Okay, next chart. Bitcoin on the left, S&P 500 middle, and we've got NASDAQ 100. So you talk about compression. Look at this candle on Tuesday here compared to Monday. Bitcoin's totally not following the script. So let's just start on the left. This is black line is the middle equilibrium, middle Bollinger Band. And you can see how far price is below it. Middle comes in at 101,000 and change, and Bitcoin's at 96. Now on the S&Ps, we're above the mid, 6073, 21,661 is NASDAQ. But I want to focus on the S&P because that's what I trade. The micro E-mini S&P 500, March contract S&P 500 futures. And I'm looking at this candle wick. It's a discount wick. Note how we pierced the middle Bollinger Band on Tuesday. And at that point, we were 660, but now we're at a 603. So this is, in my view, with my trade model, super dangerous to put on anything more than 20%. Like 30% is too much. 20% is ideal. I can trim and trade around 30, 40, 50%. But I need to come back right down to 20%. CPI is 8:30 a.m. Eastern Standard. So I do expect candle wicks and there's a good chance we could go down and test this middle Bollinger Band and go below it, but I do expect support near the bottom of the previous day's low. So this is how to trade profitably when you've got compression is you don't take large sides, you dial back your leverage and you wait for confirmation on the news catalysts. Plus, we could have some kind of news, political news on tariffs come out also on Wednesday. So that's something to note too. So I'm just talking about what we do know, which is CPI inflation numbers for consumers is coming out 8:30 a.m. Eastern Standard. And right now, as I speak, it's a 693. And it looks like, yeah, we want to go above 6,100. And the question is, how far and when? So ideally here, we want to wait, look at all the catalysts. We do have a catalyst beyond CPI. It's going to be PAL again with another day of congressional hearings. And then on top of that, again, we could be hearing about tariff news. So once I've got the higher time frames sorted on the charts on the S&P 500, I'm going to really go, especially on days where it's FOMC day, it's non-farm payroll, it's CPI day on Wednesday. So I want to go to a range chart on the left with Keltner's upper, middle, lower. And then this is a Renko. And all these zigzags, when they're compressed like that, is high resistant conditions. That's not amenable to my trade model. So you can see right here, we had low resistance all the way up. This was right when the Super Bowl was starting at the beginning of the Asia Globex session on Sunday, Monday. And the bulk, 58% of the whole range for the week so far was this move. And since then, we've been compressed. So what I'm just looking is, do we have any displacement during the CPI before New York opens down to this red line? And that comes in on the middle Keltner, currently at 6072. On the right is the 1 hour, and the 1 hour is Keltner channels again. And it's 1 hour. You can see compression on these candle bodies, lots of wicks. So again, high resistance if you've got small bodies and large candle wicks, not a time to be loading up on size. So you need to properly be sorting out your leverage for sure and dial it way back until the news confirms. You can see we've got a big gap between the middle at 6083, which kind of is a higher angle than the Renko, but still I'm looking. What was displacement? I've got this line at 8750, 8750. I'll probably trim and trade to a lower amount on a fade if I were going to have more on here, but it looks like we could go to this upper quite easily, which is 6104. And on the upper on the left, it's 6130. Big difference here on the settings. So this is my secret go-to chart that I'll be looking at the moment we've got the news. I'm going to get off a 1 minute, 5 minute, 15 minute, and I'm going to go to these range chart. I'm mostly looking for what's our peak range during the first open range of New York, first half hour, and then the first half hour after CPI's announced. Next chart. My go-to 15-minute chart. So this is a naked chart without any indicators or points of interest on price action, inefficiency, and gaps. So sell side liquidity again comes in for me starting right here, which is that 8750 to 88 zone. And you can see here, we're at the upper level here of Tuesday, Monday highs up there. That is going to be our buy side. If I go back, this was Friday with this big displacement down. We recouped a lot of it. Now let's look at some of the price action. So very important I map this out. So what we're recouping right now is a large 1 hour fair value gap on this large yellow rectangle. Notice how we're dancing around this red line on it. The red line is consequent encroachment of this 1 hour. Once we go and close above it, then we could head higher. And what's above it is a major January 27th new week open gap. And that can go all the way to 61.20. I'm really looking here, first of all, for price action to go and bust out of this yellow rectangle and go into at least this 61.20. Am I going to play it long? No. I'm looking for the highest possible action at the right time of the day, and I'll fade it. I am not going long this market with the way things are reacting with price action, but I'm definitely not putting any shorts on now other than a scout team. So this just gives me a lay of the land. These new week open gaps I've learned from my ICT mentorship days that still continue from 2023, 24, and 25. It's very important that, though, the time delivery of everything that happens. So there's London, there's the news, there's New York, AM, and then, of course, there's the PM session. So I need to keep a lot of ammo, dry powder, so I can play with the time delivery of price action and see, are we going to respect or disrespect these giant premium discount arrays here? Below, if we were going to tag anything below, I've got a red line, PM low for the prior day. It's 6079. The high, the first thing to break on upward is 6098 on its way to 6100. That was the PM high from prior day. I do expect we're going to break through that pretty quickly just based on what we're doing here in pre-market. Okay, let's go to the last chart. US dollar, VIX, 10-year yield. I'm going to watch after the CPI, specifically the US dollar, but more importantly, the 10-year yield. This is the real concern here. Is this yellow rectangle here was created on CPI December 18th to be exact, and that was a fair value gap. Same with the US dollar. So we've got a trend up. We did violate the last week, the candle body here in green, but it closed at the top, and one candle wick here on Monday on the mid and body above. Here was the prior day, body above, and here we are, CPI Wednesday in Asia. Right now, consumer debt, credit card revolving debt is very high in this country. The numbers just came out in December, but if we maintain high 10-year treasury yields, that's going to put a big damper on the equity market. So I was looking to see this, if this would hold, if it would abate, if it will go lower. It's not going lower. And the dollar looks like it could go, but it's not below this yellow. It never got below the yellow in the last 4 days where the treasury yield did. So anyway, the volatility on the VIX in the middle chart, 1602 currently, slightly elevated. We'll see what happens, but I just wanted to make sure we got that chart out of the way, because before New York opens, I am going to take a glance at the 10-year and the dollar reaction, because it's not the number on the CPI, it's the reaction that I'm looking for.